Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Wednesday, February 14th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the chart. Start with the big picture and work our way into the day itself. This just backtracks, shows you the channel dynamic that's in play longer term coming off that July high. 255.60 is the channel top. We tested that about 7 weeks ago, and at the time we were approaching it and testing it, then in the low to mid 260s, as I recall, we had mentioned that once testing the channel top, you should allow for a bearish rotation over the following weeks and months, 3 to 5 months at the most, back to channel support. That is this week at 171.79. We did test that channel bottom last week. It is really the beginning of a range that is started at 177 and a quarter. That is a 5/8 downside Fibonacci from the January 23 low against the more recent July high of last year. And so your 170, 179 to 177 and a quarter area is your bottom picking a zone of support that can absorb selling not only through March, but even through the second quarter, and above which this market can rotate up back to the 255.60 channel top over the next 2 to 3, 3 to 5 months at the longest. Our clear-cut signal for whether we will test 255.60 or not, or actually expect it outright, would be a settlement in the coming several weeks above this newly formed descending one-third speed line at 212.20, and is newly formed because it is based in part on the low that was put out about a week and a half ago, also using the July 23 high. It is trend defining in its own right, able to contain buying on a monthly basis. We could test 212.20 over the next 3 to 5 weeks or so. I'll get to that in a moment. In fact, if we test the low 170 support, you can begin to set yourself up for that. In other words, so long as we continue holding that 170, 179 to 172.30 region on the daily chart, testing it, holding it, obviously the time to act in an optimal price point sense is as we're testing it. That is the best you're going to get, assuming the market then bottoms out off of this channel bottom and rotates back to 212.20 within 3 to 5 weeks. And as I said a moment ago, quite possibly all the way back to the 255.60 channel top within several months. And whether or not we can expect 255.60 has everything to do with whether or not we close above 212.20 in the coming weeks. But this shows pretty well what I would call our 3 to 5 week barriers, so to speak. 172.30 floor in the daily chart, 212.20 ceiling, both of which are dropping at a steady pace. 212.20 dropping at a steeper pace. We could top out at 212.20 through March, fall back to 172.30 within 3 to 5 weeks, bottom out at 172.30 through March, rally back up to 212.20 within 3 to 5 weeks, fill this wedge out for the next month or two. Closing, though, above 212.20 would once again indicate the mid 250s and dropping within another 3 to 5 weeks. So in terms of options trading, as we're slipping back into the low 170s, which is assumed to be the case, assume is a strong word in technical analysis and market direction. You just kind of play the dynamic at hand. And what is at hand is at this point in time a descending 1/3 speed line today at 188.19. Now, yes, we did. Do we show it anywhere? I don't show it today. My regrets, because I still think it's a good lesson. And that is to say that there was a descending channel top coming down, as you're well aware, over the last couple of weeks of trade that we did close above last Friday. Monday was a key reversal high day, new pullback high. We closed back below Friday's low. That in itself was a sign of weakness. But really, also what happened was the fact that all along the 188.19 descending 1/3 speed line projected off the December high was tested and essentially held. Yes, Tuesday we pushed through it in a meaningful way, but we certainly opened and closed below it, and we're continuing south from here. 188.19 is our upward pivot point through next week. Until then, the 172.30 formation is likely as a downside 3 to 5 day target. Downside today, I do have 181.06. That is the low settlement price that was put out about a week and a half ago. We could certainly bottom out there on an intraday basis. From there, rally to 188.19 perhaps, and vice versa. If we break 181.06 today, we could, on an intraday basis, test this 172.30 level. And don't forget, all of that is preceded by 177.25. That really is the beginning of a range all the way down into the low 170s, 177.25 down to 171.79, where, for instance, if you're short the market right now, over the last couple of days, you're taking profits in the low 170s. If you're not short, if you're not in the market at all, maybe you're waiting for 170, 179, or 172.30, or even 177.25 as a bottom picking area. And if you do happen to give the opportunity to buy that again, 3 to 5 day swing traders could anticipate the 188.19 speed line. 3 to 5 week swing traders can anticipate the 212.20 speed line. And 3 to 5 month near term investors can once again anticipate the 255.60, a longer term channel top. Now let's talk down. Actually, let me go back to the upside because we're much closer to that than we are to the downside. If we happen to close today above 188.19, 197.36 is likely tomorrow. 206.27 within about 3 to 5 days. Do I show that anywhere? Yes. 206.27. And over the next couple of weeks, I'd say 1 to 2 weeks, not 1 week. That would be a substantial move within a week, but inside of a couple of weeks of closing above 188.19, I see no good reason to be short Tesla as we move into next week if we close today above 188.19, because I would then expect inside of 2 weeks that 212.20 descending speed line, where once again we can top out through March trade and fall away, and if settled above, would signal the 250s channel top within another 3 to 5 weeks. Last thing I will say, and I don't see it today, but if we close the week Friday below 171.79, it really does need to be by a 1% margin of 170.07. So Friday settlement of 170.07 or lower. If you bought any of those out of the money calls over the last couple of weeks, if you're long Tesla itself and your time horizon is anywhere from 3 to 5 days to 3 to 5 months, I see no good reason to be long Tesla if we settle Friday at 170.07 or lower. Then anticipating over the next couple of months, 2-3 months, this 100.79 former descending channel top preceded by the 101.81 January 23 low. That is about as simple as I can put it. Please click like, share, subscribe. Check out wickedstocks.com for our 5-day free trial. You won't regret it. I'm going to leave it at that for Wednesday's Tesla Report. You have a great evening.